The EU AML framework does not enforce itself. Behind every directive and regulation sits a network of institutions, each with a specific mandate, a defined jurisdiction, and a clear role in the overall system. Understanding who does what is not just useful context. It is tested knowledge for compliance professionals. Regulators operate at two levels simultaneously: the European level, where policy is set and standards are harmonized, and the national level, where supervision is applied to actual institutions operating in each member state. These two levels are connected by design, and the newest piece of the architecture, the Anti-Money Laundering Authority, is precisely the mechanism meant to bridge them. Proper integration is key to the system's success. At the top of the European legislative architecture sits the European Commission. Its role in AML is significant and multifaceted. The Commission has what amounts to a near monopoly on legislative initiative in the EU. It is the body that proposes new directives and regulations, and can be invited by the European Parliament or the Council to submit proposals. Beyond legislation, the Commission adopts delegated regulations to fill in technical details and ensure uniform implementation across member states. It monitors whether member states are actually transposing and applying EU law correctly, and it can initiate infringement proceedings against member states that fall short. It conducts the EU-wide risk assessments we covered earlier, helps align national risk assessments with EU priorities, and maintains the official list of high-risk third countries, the jurisdictions that trigger enhanced due diligence when your institution deals with customers from them. AMLA, the Anti-Money Laundering Authority, was established by Regulation 2024-1620 and is headquartered in Frankfurt, Germany. It is a supranational regulator, meaning it sits above member state authorities and has authority across the entire EU. AMLA has two supervision modes. Direct supervision applies to financial institutions that operate in at least 6 member states and carry a high residual risk profile. These institutions can be placed under direct AMLA oversight either at AMLA's own initiative or at the request of a national supervisor. Indirect supervision works through national authorities. AMLA coordinates and monitors them, but they remain the primary contact for most institutions. Beyond supervision, AMLA supports EU financial intelligence units, and is building cooperation agreements with the EBA, EPPO, ESMA, and law enforcement bodies including Europol, Eurojust, and the European Public Prosecutor's Office. Technical standards will be issued by AMLA in stages through to mid-2029. Two more EU bodies play key roles in the AML regulatory architecture, the EBA and the ECB. The Paris-based EBA protects the EU financial system's integrity by preventing money laundering. It leads AML policy development and fosters cooperation and information exchange across the EU. It also monitors implementation to identify and address supervisory vulnerabilities. The EBA mandate is provisional until December 2025, when a new authority takes over. At that point, AMLA will take over the primary regulatory responsibility completely. The Frankfurt-based ECB supervises significant financial institutions across the Eurozone. Its mandate is prudential, not AML. Therefore, it cannot impose AML fines directly. However, it can withdraw banking licenses for serious deficiencies, a significant background threat. Two bodies operate at the EU level with a law enforcement and prosecution mandate: Europol and the European Public Prosecutor's Office. Europol was established in 1998 and is based in The Hague. It became a formal EU agency in 2010. Its role is to serve as the central hub for coordinating criminal intelligence and supporting member states in combating organized crime. The European Public Prosecutor's Office, the EPPO, is the EU's independent public prosecution office, operational since 2021. It investigates, prosecutes, and brings to judgment crimes against the EU's financial interests, including fraud, corruption, and associated money laundering. It is designed to be an accessible and independent body. Europol provides intelligence. The EPPO provides prosecution. Together they form the EU's enforcement backbone, above and alongside national authorities. Below EU regulators, each member state has national supervisors and intelligence units for day-to-day oversight. In France, the ACPR handles banks and insurers, while the AMF supervises investment firms and asset managers. TRACFIN, the Financial Intelligence Unit, receives suspicious reports and passes critical intelligence to law enforcement. In Germany, BaFin supervises banks and financial firms as the Federal Financial Supervisory Authority. FIU Germany sits within the Customs Directorate and handles all incoming suspicious transaction reports. The Federal Ministry of Finance also coordinates national risk assessments across the German jurisdiction. Every member state combines a supervisor, a markets authority, and a financial intelligence unit. The names change, but the architecture is consistent across the entire European Union. In the Netherlands, the regulatory picture follows the same logic. 3 key bodies handle supervision and intelligence. De Nederlandse Bank, the DNB, is the prudential supervisor, while the AFM supervises conduct and markets. And FIU the Netherlands is the Financial Intelligence Unit, embedded within the National Police and overseen by the Ministry of Justice. The scale is significant. In 2023 alone, FIU the Netherlands received 2.3 million unusual transaction reports. It disseminated 180,000 suspicious reports to law enforcement and sent over 2,600 requests for information. What professionals report enters an industrial-scale system. The precision and accuracy of those reports determines how useful that intelligence is. The compliance professional is not just a rule follower, but a critical contributor to the entire financial system's integrity.